and welcome. So on behalf of Finastra, so very warm welcome in very warm day. So I'm Nazan, so I'm working for Finastra in sales, and this is Sherry. So we are very proud to host this event in collaboration with Professor Pinar Ozcan and together with University of Oxford Saïd Business School. And yeah, we are very proud and feel privileged to host you, all of you here tonight. And Sherry.
Thank you all for joining us today. Our executive sponsor, Andrew Bateman, was not able to make it today. However, he did record a quick video to welcome you all. So we'll show you now.
Hello, everyone. I'm Andrew Bateman, EVP for the lending business at Finastra, and I'm delighted to welcome you to this special event co-hosted by Finastra and the Oxford Business School. I'm sorry I can't be there with you in person today, but it's a real privilege to open today's conversations, which celebrates and supports one of the most dynamic forces in business today, female founders. At Finastra, we believe that innovation thrives when diverse voices are heard, empowered, and elevated. That's why we're proud to stand behind this event. Female founders are not just building businesses, they're reshaping industries, challenging norms, and creating more inclusive economies. Yet we know the playing field isn't level. Access to funding, networks, and visibility remains disproportionately skewed. That's why gatherings like this matter. They're not just about inspiration, they're about action. Our support for female founders is rooted in our broader commitment to equity and innovation. Across our business, we're focused on creating inclusive pathways, whether that's through our internal leadership development programs, our work with fintechs, or our global initiatives that champion underrepresented entrepreneurs. We're also investing in research, mentorship, and access, because we know that when women succeed in business, communities prosper, and the entire ecosystem benefits. The data is clear. Companies founded or co-founded by women deliver strong returns, foster inclusive cultures, and often tackle problems that have been overlooked for too long. But remember the numbers. It's about perspective. Female founders bring fresh thinking, resilience, and a deep understanding of the communities they serve. They're building solutions that are not only commercially viable, but socially impactful. And that's the kind of entrepreneurship the world needs more of. So today, I encourage you to listen deeply, connect meaningfully, and leave inspired to champion the incredible talent in this room and beyond. To all the founders joining us, thank you. Your courage, creativity, and leadership are shaping the future of business. And to everyone else, let's make sure we're building a future where every founder, regardless of gender, has the opportunity to thrive. Thank you and enjoy the event.
Everyone, thank you so much for being here. I'm Pinar Ozcan, and I represent the University of Oxford, and I'm the founder of this initiative, which is Inspiring Female Founders. The problem in the world, and I know you know this problem because you're here, is that female founders there's just not enough of them, and we don't have enough support. And when we see the numbers across the world, we see that only 20% of all startups have a female founder. And when you look at, for tech startups, it's even less. And globally, while these numbers are for EU and US, globally under 3% of all female founders receive support. And the problem is, even funny enough, I was really surprised by this. When you look at female health, femtech, a founding team is much more likely to get funding if there's at least one male founder. Now, I don't really know what he brings to the table in this particular case, but it's a problem that we have, and we are here to help make progress on that. So we said, what can we do as Oxford? There are many networks around the world. There are many things that people are doing. But one of the things that Oxford can do is, because we have the pedagogical perspective, we can tell female stories. And that's why we're here tonight, and that's why we will be here and in other places around the world in order to tell these female stories. These stories are online, and my goal, and hopefully with AI, now it's a lot easier, with AI we're going to be telling these stories in as many languages as possible. And the goal is to inspire young women to become entrepreneurs and to show them what a path for entrepreneurship looks like. I'm particularly honored tonight because my 13-year-old Milena is here. And she, hopefully, I don't know whether she'll be an entrepreneur. She's 12-year-old Zoe. And 12-year-old Zoe, where are you? Yes, hi Zoe. And my hope is that they see that this is possible, that this is something that at some point in their lives that they'd like to do, and when they are grown-ups and the world is hopefully a better place, and that there will be more support for them. So with this goal, we've started the series, and we have many female founder stories. Lucy, who is one of our panelists, was our first founder story, and Shefali, who's one of the investors on the panel today, is going to be one of our stories as well. We just published our AI story, which I'll tell you a little bit about. But one of the things that I'm particularly proud about is that we already won an Educational Impact Award with this. But I don't want this to be just an thing that every young woman can read about and then think about entrepreneurship and find stories not just from Oxford or not just from US or from Europe, but from anywhere in the world. One of our current cases is from Africa, and it's a payment systems provider that is trying to achieve financial inclusion there. So as many parts of the world, as many languages, so that young girls have something that they can read in order to get inspired. That is the goal, and we're hoping to build a platform, and we're looking for your support, both in terms of spreading the word, in terms of pointing out amazing women like yourselves that we can write the stories of. One of them, the latest one, is Zehra Çataltepe, who's comes from rural Turkey, and against all odds, she went to get a PhD in AI in Caltech, and then went to Silicon Valley. And she is trying to make AI more explainable so that people who are in the financial industry who know numbers but don't necessarily know AI can work with AI and adopt AI easily. The next event and the next founder who's going to be on the event is going to be Natalie Miller, who is a virtual reality founder. What she does is she's from South Africa, and part of her company, XR Global, is providing training through virtual reality for corporations in any subject, technical, HR, etc. But then the other side of the company is shipping those headsets to African villages in order for children to take turns to learn English and anything else that they don't get to go to school for. So we're going to be telling her story in Tech for Good, and that's going to be again in London on September 15th. So please look out for that. Now that you're on our mailing list, there's no escape anymore. But today, I'm particularly proud to have 4 amazing women with me on the panel. So we have Maria, Lucy, Shefali, and Jenny. We have a deep tech founder, we have a fintech founder, and we have 2 amazing investors who I get to call good friends, and I'm so happy that you're here. Can I please ask you to join me? Now, I don't want to be far away from you, so I'm just going to move myself if you don't mind. All right, let's see if I can. These chairs are weird, yes.
Chairs are discriminating against ladies. That's the first one, I'm sure.
All right, thank you so much for being here. If I could get all of you to tell us a little bit about your story, where you're from, and how you got into entrepreneurship and investing, and then we'll take it from there. Maria.
Well, I'm Maria. I was born in Uruguay and then forced to live in Barcelona. What a shame. I moved to Barcelona when I was 14, and then I did engineering there. I studied telecommunications. And then I had to find a job around 2008, and then it's when like the crisis hit really bad, and I was like, I think I want to work for a corporation until I'm 67. So I went on to do a PhD because I was having too much fun in university. And then I wanted to quit my PhD because it's too long. And I came to London in an attempt not to quit my PhD. And I landed at King's College London with a professor who was very entrepreneurial and allowed me to do a lot of innovative stuff. So I started an innovation lab there, funded by a very big corporation called Ericsson. They build telecommunications equipment. And I had the opportunity to break things there. I got a lot of money to break things. And grew the lab to almost 30 people, delivered great innovation, great impact. But if any of you are an academic in the room, you can understand that that is not good. You need to write papers, and you need to bring grants. And that's not the way that academic research actually values their employees. So I was like, this is great. We're doing a lot of innovation. I'm not really getting, at 27, had achieved the ceiling of my career in academia because I did not want to become an academic. So I went on to start a business out of something that the research was telling us that it might be a good idea. And fast forward 7 years, and here I am, still growing the business, and yeah, still learning a lot, but really excited about being here and telling the story.
Can you tell us what Weaver Labs does?
Yeah, so as I said, my background is telecom. So when I was in the lab, one of the things that we were doing was build networks to potentially change industries and the world eventually, right? And as you may all know, like, you get coverage where the mobile network operator wants you to get coverage. So that means that there are areas that are deprived of basic internet services. And when we were in the lab, we were playing with robots and augmented reality and virtual reality and autonomous vehicles and all sorts of stuff that require networks to function. So all of that innovation was ready, but the networks that needed that innovation to sit on, they were not there. So we created a product that allowed for private networks to be deployed really fast and removing all the complexity that inherently exists within telecommunications networks. And that product now is sold to mainly venues and like stadiums, ports, hospitals that require private networks, enterprise networks to function, with the added capability of having a compute platform to host all of these innovations and applications. So very deep tech, but looking at how can it potentially change the world.
Absolutely. Thank you so much for being here, Maria. Lucy.
Good evening. Very nice to be here. I started my entrepreneurial journey with a microphone that was attached to my face, like Madonna. When I was 15 years old, I decided I wanted to be an aerobics instructor. You couldn't qualify to be an aerobics instructor until you were 16 because you couldn't get insured. But I managed to get myself into the local college to train as an aerobics instructor. And on the day I turned 16, I got my insurance to run my own business, Flab to Fab. Oh. That is not what you'd call a business today, but back in circa 1996, it was very funny and people thought it was very cute. And I used to drive around the local village halls in Oxfordshire. That is not what I've raised VC funding for, but that is where the entrepreneurial journey started. I think I've always been unemployable. I like to break rules and be rebellious, so I sort of had to forge my own path. I had a little dance with HSBC on the graduate scheme for a bit and realised I don't like following rules or being told what to do, particularly by stale, pale, white men. Sorry. I did get told off for saying that once on a panel, by the way. Some stale, pale, white man said, I actually find that very discriminatory. So apologies if anyone is offended by that. But that sort of environment, like the corporate environment, working till I'm 67, that was never going to work for me. So I did actually end up going to Oxford University, and this is not a plug for Oxford University, but by chance I ended up working at Oxford University and running a research institute there. And from there, I discovered the business school, and I got sponsored to do an MBA there. And that's when my eyes got lit up to something more than maybe running a lifestyle business, which I've been doing for a bit. was to say, actually, oh, this is the world of entrepreneurship and you can build things that are socially impactful and make money. This is very exciting. And so it was just kind of on my radar. This is about circa 2010, 2011. The moment I'd had my MBA paid for and sponsored, I handed in my notice and left. And I set up a business called Strategically Blonde Consulting. Yes, I like to name things with slightly tongue-in-cheek names. And that was the start of going out on my own. And the reason I'm telling you this is a backstory to how I founded Circles powered by StepLadder, which is the fintech business that Pinar and I have collaborated on in her great case series. So when I was doing Strategically Blonde Consulting, I didn't really have an idea. And you don't really hear many entrepreneurs say that. I thought, I don't really know, but I don't want to work for anyone else. So I know, I'll just say I do interesting projects with interesting people and see what happens. And what happened is that I had 5 great years of doing consulting and working with various people, helping entrepreneurs build their businesses. And then I came across a wonderful guy called Matthew Addison. And if you've read the case, he's my co-founder. And he had the seed of an idea for running collaborative saving circles, which I know some of you I've spoken to in the room know. You know them from around the world as Hagbads, Ajos, Stockwells. It's a way of people coming together and saving money together. And we may talk about it a little more later. What I really love about it is around the world, it's used in particular by women coming together to support each other to raise funds. My co-founder Matthew had studied this in Brazil and wanted to turn it into a business in the UK. And I was introduced by a friend of a friend from business school. So this did actually all come out of the Saïd Business School. And I started doing a little bit of consulting work through Strategically Blonde. We immediately hit it off, had a shared vision. And within about 6 months, he said, you need to be my co-founder. I can't do this without you. And he's damn right. He couldn't do it without me. And I couldn't do it without him. We love being a team. It's a great partnership. We've been doing it for 8 years. And I know we're going to get into talking about the funding later, but just as a headline, because I know that's what many of you are interested in, we've raised 4 million from angels and VCs, and it's been disgustingly hard and stressful. But we did it, and now we're running saving circles, which is very exciting. So yeah, it's a little bit about my entrepreneurial journey.
Excellent. And so just to follow up, the circles is, I know that you started with a saving circle, which was almost entirely WhatsApp based. Yeah. But now you built a platform to it, right?
Absolutely. So when we started in 2017 in the UK, we did that, really rough and ready to market. Let's get some people together. Let's get a WhatsApp group, see if this can work. B2C to buy your first home, which is where the name StepLadder comes from. Step onto the ladder, buy your first home, raise your property deposit. Unfortunately, the UK regulatory system is not kind to this way of saving. We don't really know this way of saving in the UK. In many other economies around the world, it's used by 70 or 80% of people in communities. 1 billion people around the world use this, but in the UK, it's very hard to regulate. So we pivoted about 3 years ago into a B2B platform business. So we built the platform so that banks and fintechs around the world can license our technology. They can deal with the regulation in country, and we do the technology provision. So that's how we've pivoted.
You pivoted from B2C to B2B.
Yeah, I didn't know what SaaS stood for, now I do. Apparently I'm a SaaS founder. And actually it's just a very small funny story about that in light of the fact we're here for a Female Founders event, is that I met a friend's boyfriend a few months ago, and without asking me what I did, I asked him, and he said, I'm a SaaS founder. Now SaaS, Lucy, is software as a service. I just sat there and I was like, oh, right, okay, interesting. And I let him talk and I let him talk. And they said, what do you do? And I said, I run a B2B global SaaS business. We're live in 12 countries. Just like shrank into his chair, and it was such a brilliant moment. So
I love it.
The kind of thing we deal with, right?
Now, over to Shefali. Please tell us your story, which I find so fascinating.
So Lucy didn't want to work for other people. I didn't want to work at all. Working is overrated, I feel. So I started my career actually also at Lucy at HSBC. I was very young. I went to university very young, so I started my career very young. I was a bond trader at 19. I would not recommend it. It is intensely boring. But I was the only woman on the floor. I was a teenager on the floor, and it was very interesting because I had to do billion-dollar trade deals, and then the guy on the trading desk would say, that's a great deal, Shefali, now go get me a coffee. And so that's the environment I grew up, because I'm quite old. And so I realized very early on that this is rubbish, and I don't want to do this forever. And so my whole life, well, not full, the next 20 years I spent thinking, how do I not do this? And so I planned my entire life and my career such that at 40, which I'm past. At 40, I could retire. But along the way, I want to do some really interesting things. And so my North Star has always been, I want to have a lot of fun and doing things that are very interesting and very intellectually engaging and challenging, and obviously make some money so that I can do this not anymore when I get a certain age. And so I've chosen careers and jobs and industries that really just tickle my fancy. I'm not saying that's the best way to do it, but that's the way I did it. And so I started at HSBC. I was in Australasia at the time. Then I went into insurance, which is a totally rank business. I would not recommend that. And then I moved to the UK. I went to the LSE, to the other place, and I did a master's there. I was an undergraduate at Oxford many, many years ago, which was also very different. Stayed in London, finished at the LSE, I went to Goldman's, which was a fascinating, actually, environment in business. And for those of you who are ambitious and creative and smart and intellectually rigorous, it's a very weird place, but if you can, you should do a stint there, because you're competing against yourself and you're competing against each other, and the guy on the desk or the lady at the desk next to you hates you. Because you're going to take her bonus or his bonus. And so you're competing not against Morgan Stanley or JP Morgan or NatWest. You're competing against Goldman's. And it's actually a fascinating place to be. So I did that, and I realized that behaviorally, I was the wrong person for this firm. I realized I was not the person for the job because I used to manage the summer associates. And I was told by my boss, who was a partner at the time, and she said to me, Shefali, you're helping the associates, and we just don't do that. They need to survive. And I was like, they're kids. And she's like, yeah, but that's not how we do things. So you need to leave. So I resigned the next day. And I left, and I thought, this is rubbish. So I did something else. And I then went to a private wealth business called Schroders, which was kind of interesting, but very, very old school, very risk averse, very boring. And then I thought, well, this is rubbish. And by then I'd spent about 10 years in finance. So I thought there has to be something different. So I changed completely, and I moved into the art world. And I went to Christie's, the auction house. And for those of you who are, I'm born of subcontinental Indian parents. I have an undergraduate in art history. And I was told by my mother, that's rubbish. You'll need to go to law school. And so I was handed a law degree timetable, and I didn't enroll in law school. My mother enrolled me in law school because when I did art history, she said, you can't get a job in this. And this is very cute, but your father and I are not going to pay for this. I was like, oh. So I then also went to law school. So when I got my job at Christie's, it was the biggest comeuppance to my parents in my world, actually. And so at the time, it's a private business. And I was charged with modernizing it and operationalizing it because it's a 220-year-old business. And we were still selling paintings over lunch. And I thought, well, you can't do this, surely. And I realized we were still doing it because a dealer or a guy who ran one of our modern art departments said, I'd just come back from lunch at the Ritz, and we sold a Monet. And I was like, where's the agreement? And she goes, I don't know, we just shook on it. And I said, that's nice, we can't do that anymore. So my job was to really put a framework behind it and legalize it and do some very, very creative things. And if you love the arts and you work in the art business, there's either Christie's or Sotheby's, you don't go anywhere else. It is a very, very incestuous business. Everybody knows everybody else. They're married to each other. So one of the most interesting things I had to do in my job is actually give one of our people a list of things they couldn't talk to their wives about at home, because we were worried about competition and collusion and price fixing. So we had to do those sorts of various things. I was once summoned to UNESCO to explain why we were selling Greek antiquities. And I was like, well, they got it, and we're just the intermediaries, so you need to talk to the Greek guys or the earl of someone who bought it or who pilfered it. It's not my thing. So I had some very interesting jobs. And then the financial crisis hit, and I thought that was very interesting, and the market really fell out. So I took a bit of a sabbatical, and then I went into tech, and I joined Apple as Apple's chief compliance officer, which was very interesting. And I ran Europe, Middle East, India, Africa, and a bit of China as well. But a very different business, and you work for people like Tim Cook, who knows your job better than you know your job, so you better know what you're doing, and you can't fake it till you make it, because the guy's like, you're rubbish, get out. And he's very, very, and he's a guy and a leader who manages in silence. So you just hang yourself because he waits for you. And then you're like, you don't know, do you? And then you just walk yourself out because you're like, I'm sacked. I'll just sack myself because I don't really know what I'm doing. And so that was very interesting and a lot of fun. And I did that for many, many years. And I had a ball, actually. And the only reason I left is because a little itty-bitty company called Stripe called me and said, can you please come help us launch Europe? And I went for the interview. And at the time, Patrick and John, they were 20 and 19. And my boss before that was Tim. And I think one of them walked into the meeting without shoes. And I was like, where are your shoes? But that's startup culture, and that's how you work and live. And so there were really, really interesting, smart, genius level people who knew very early on the 10, 20-year trajectory of Stripe. And so now I'm so pleased sometimes when I see Stripe launching product, because I remember talking about those products 10 years ago. And it's very interesting how they've built businesses and they've taken over the world. So when I joined, I think I was the 5th person in Europe and about the 80th person globally. And now they're like 4,000 or 5,000 people. We have no idea what they do, but anyway. And so I did that for a while. I then undertook a master's at Oxford concurrently, which was stupid because I was shuttling between Oxford, London, and San Francisco. I was also having a relationship with someone in San Francisco, which was also pandemonium, so I wouldn't recommend that. And so she and I were trying to do all this thing, and it was pandemonium. So I got burnt out after about 2-3 years. So I built Stripe's back office for compliance and risk management and all this sort of stuff, got it licensed all across the world, and then finished my degree full time, and then took a break, then went and joined a company called TrueLayer, which is an open banking, open finance company, as their 4th employee, as their CEO, and I managed everything other than product and engineering. And by this time, I kind of realized I really don't need to do this work thing anymore. So I stopped working in 2020. And I've basically just been running my own family office, and I look at investments, and I invest in very, very early stage startups in finance and AI. I sit on a handful of boards. I teach at Saïd. I also teach at the LSE. And then I do weird dibble-dabble things of other things like this, which is very pleasing. And thank you for inviting me. And so that's my story.
Thank you. And SDR Capital, actually.
Oh, yeah. Sorry. Yeah, that's the family office. That's what it's called. It's not very creative. It's just my initials. I was bored by the end of it. So it's a very small off my balance sheet, and I invest. I've got about 30 investments. The criteria for the investment is one of the founding team has to be a woman, has to have a woman or a diverse person. And for me, diversity is gender, ethnicity, sexuality, or socioeconomic background. So one of the founding team has to have that. It's a global portfolio. I have about 30 investments, had about 2-3 exits. So it's doing all right. It's doing okay, I feel.
Excellent. Thank you, Shefali. Jenny.
Can't follow that. That's amazing. What a career. I'm very proud to have met you. Thank you. Amazing stuff. Yes, so I guess, yes, I also went to the other place to do my master's. Yeah. I went to LSE. And I found my way to Oxford, all kinds of interesting routes. But for me, I really left when I did my master's, which was in economics, my big kind of focus had been all about SME, finance, small businesses. And the thing that struck me most was the hardest thing they had to do was find money. So that was really the source of my consultancy, which I set up, a strategic consultancy to advise businesses to find money. But actually, interestingly, at the time, and I'm talking about the late 90s, early 20s, that was all about public money. It was not actually about equity. It was actually really mining European money. For any of you who've actually used European money, certainly before we Brexited, it was amazing and amazingly available, far more than UK public money was at the time. So I actually built my business between London and Brussels and ran that, really supporting entrepreneurs directly, but also networks and agencies that were supporting entrepreneurs. So anything from innovation agencies to chambers of commerce across Europe. But it was always the key was supporting entrepreneurs who wanted to innovate and grow. And through that, I really learned a lot. I learned a lot about the needs of businesses and what they needed to know. But actually, during that time, I also came across angel investing. And I really fell across it as the most amazing thing because I was helping an entrepreneur find finance, and they mentioned that they'd been speaking to a group of angels in London. So I went along to speak to them. And I realized it was the most amazing thing that individuals gave their own money, made their own decision to back entrepreneurs with their own money, making their own decisions. and using this direct mainly off their own balance sheets. Probably only a few had got a family office, most really direct. And I really just fell into this and thought it was amazing. I managed to sell my business at that time, so I started angel investing and joined this same London group of angels, which was called London Business Angels, and it was probably about the oldest established one. Really got to know it. The one thing that was clear to me, I was one of the few women in the whole group that was investing. So mainly men. The only people I really mainly met who were angels were also men. So this really began for me a passion about wanting to build and help more women to invest. And I co-founded then Angel Capital Group, which was then we also sold. But that was very much to start that ball rolling about helping more women to understand the opportunities to invest, but also helping more women as founders and entrepreneurs. So financial crisis came, the whole funding opportunities for entrepreneurs fell down, and especially for women too. So I was invited by what was then Cameron's government. So at the beginning of the Conservatives' run in 2012. So I was invited to set up an angel community really across the UK. And David Cameron, we pulled in as many people as we could find who were business angels. And David Cameron stood up and said, "Your country needs you. We have no banks lending to entrepreneurs right now. No one's bringing money towards entrepreneurs. We need people like you as private individuals to do this." So really my role really began in earnest there when I realized how hard it was to find angels, but also how so much of that money was also focused on London and on men, really almost entirely at the time. So that became my mission in setting up the trade body called UK Business Angels Association, which was to both make it much more accessible across the regions of the UK, helping to build and grow angel investors across the regions, but also helping to attract more women. And it's been a very, very long uphill battle. I was very fortunate then to be invited to join. Some of you may have heard about the Alison Rose Review, but she is the CEO of what was RBS at the time, then became NatWest, had identified through research that there was 2.5 billion that could be put into our economy annually if we helped more women to be entrepreneurs. And we talked about it a lot, and she recognized, like me, she recognized the point that we needed more women to invest, not only through banks, but also through equity investing to help many more women entrepreneurs. So I then set up on the back of that the Women Backing Women campaign, which was really to help many more people as women who really had no sense of their own opportunities to start investing. And we'll say a bit more about that in due course. But the lack of knowledge, opportunity and access that I found among women was huge. And I realized that anyone who'd even tried to invest had found themselves surrounded by men in a world that they couldn't really feel they could participate in. And the deals that were being shown were not ones they necessarily wanted to do. So again, that's really what I've been working on. I work really closely with government. I'm now part of the Investing Women Task Force. We'll talk more about that. But it's really been my abiding passion. I stepped aside slightly. I'm now executive chair of UKBAA so that I can really work much more strategically rather than operationally on this. But for me, this is I guess it's my mission. And I met someone I hadn't seen for some time, a wonderful woman just yesterday in the Institute of Directors, who said, "Oh my God, that's you, Jenny. Are you still around?" I said, "Yes, well, the mission is not done yet." And unfortunately, I guess I've set myself probably a fairly impossible target, but there is a huge opportunity for us all to do more on that. So as long as I can, and as long as I can get support for this, which I believe is growing, both in government and corporate and strategic. In fact, that was a very, very important talk that your colleague did from Finastra, because we need our men allies as well as women in this. So I talk to men as well as women. I'll say a bit more about that. But for me, in a way, it's been relatively linear for some time, because I've had this incredible mission that we must help women as entrepreneurs, but that women are a huge part of this in terms of the solution. So yeah.
Thank you, Jenny. Thank you for being you. I want to jump straight into the first theme that's related to funding, which is what is out there, what are the possibilities? And I want to first turn to our current founders to tell us a little bit about their journey. I know that your journey has been quite different from Lucy's, so could you guys tell us a little bit about your experience so far with funding?
Yeah, so unlike most here, I did not go to entrepreneurship school. So I had no idea where to start. I had an idea and I had a lot of, willpower and resilience, but I didn't know. So my journey started really bad. I took a loan and gave equity, and I had to pay back the loan, and the guy would keep the equity. That bad. And no one told me, no one lawyer in the city told me, run away. They took my money and they made me sign that deal. That was bad. As you can imagine, that was really bad. So took the money and then went into an accelerator program, and that has been my only experience with VCs because it was disaster. So we went to the accelerator program, and obviously once the accelerator program, they prepare you to go and fundraise, and then by the end of the accelerator program, after taking our 6% from the cap table, they look at our cap table and it's like, oh no, you can't fundraise with this. What are you gonna do? So now I had a product that I wanted to launch, I had no money, and I had to fundraise. And no one was going to fund the business. So I went back to the guy who gave me the loan and I said to him, if you want your money back, you need to give me my equity back. And that was a year of fighting, I managed to get an angel investor to believe in us. And with him, we managed to really get our equity back and renegotiate the terms of the loan. And that angel money was also going to unlock government funding. I love that you mentioned that, because Weaver Labs has almost only existed thanks to grant money. And so we got $500,000 from an angel investor, which would unlock 800,000 from the UK government in the form of a DSEED fund. So in that the time was DCMS, but anyways, sometimes you need to do 70% co-funding from the business. And that's how we started. And then we've brought some other angels along the journey, but only because they were people who, all men, who A, believed in the business, and B, would bring something to the business that is not just money. So for years, I didn't have a CFO because my investor wasn't a partner in E&Y for transfer pricing in the Americas. I did not need anyone to coach me on business development because my other angel investor happens to be a billionaire in the US who sells brilliantly financial products. I don't understand his products, but he does help me used to help me a lot on the sales side. So we brought along people who really believed in us, but I had to wear my hat of a researcher and an academic. I write grants and write a hell of a lot of grants. So we've done European Space Agency, we've done DSEED, we've done Innovate UK, never done EU because obviously after Brexit, Horizon was like, yeah, I know, but we lost all the relationships now. So we need to rebuild those. But we've done over 4 million in just grant money. And to date, I think we've done in equity funding over 900 in total. And that has taken us to a point that it was, okay, great. So now we are profit making. And I learned how to be a founder that lives with very little. I've never had millions in the bank account because I never closed a massive round of investment. And yes, in the grand scheme of things, over the years, we've raised a lot of money in grants, but it was always like 400,000 here that, you know, it's going to take you, like yesterday, literally yesterday, I found out that we won a contract for 440, and I know that that's going to last me 4 months. Right? So even today, 7 years later, when you're a business who runs on a cash flow and not on a funding round, your runway is always very short, but you learn how to live with that. And I was telling, like, we don't have AC in the office because, you know, I refuse to spend money in things like that. So I learned how to grow a business. Yeah, like you don't think about that in London. Like, it's 3 days. Like, the office is nice and we don't want to lose that. But the point is that you learn how to scale the business when you actually need it. Never really had to fire anyone because we didn't have money to pay, which is something that I'm really proud of. And then whenever I'm faced with it's like, oh, Maria, but you need to go on fundraise, maybe VCs now. Then I go and I take the meeting, and there I am being schooled about my product and about my industry and I'm just like, I can't do this anymore. I'm going to go and write another grant because I know that that's like easier to win, at least for me. Also, mind that we're in the telecommunications industry, and I also work a lot with UK government in the context of advising how to grow the telecommunications sector. We're a very, very bad funded industry. It's not seen as innovation or deep tech. So it's really hard as well. So I think we have both the problem. But I remember back in the day when we had all of those cap table issues and fundraising, I would go back to my team of co-founders, both men, and just apologize for being a woman, right? And saying, like, I can't do this. Like, I can't. Like, these people are asking me all the wrong questions and I can't change that. And fortunately, I found backers that really believed in our mission and in our product and didn't mind that I was a woman. But yeah, exactly. Grants was...
Exactly, and I think that many entrepreneurs don't realize that grants are available to them. Right?
Yeah, and I think, I mean, the ones who come from academia maybe more, because we need to live from grants, right? That's how you pay your salary, essentially, if you don't want to become a lecturer, and that was me. So yeah, you learn how to play that game. But two things you're not told as an entrepreneur: what a cap table is. Now I know, and how important it is. And the other one is that there is equity-free money and the lending space. That now on the scaling side of things, now that we're looking at scaling, a whole new world has opened up for me on venture debt. And we're in the city, so it's full of banks that are ready to give money if you have obviously like a lower risk. But it's another element that some companies go for Series E, D, whatever, and it's like, well, just don't sell your equity, get debt. So that's another world that for me it's opening up now.
Excellent. Lucy, what's your journey been like?
I just want to ask if there's any VCs in the room. No. Yeah. No anymore.
They're friends. They don't mind.
Yeah. Just in case I say anything mean, it's not about, it's just like a few general observations, and it comes from my own stress of the process. So I actually think it's been a combination of, we have been lucky, and Matt and I as co-founders were from quite privileged backgrounds in the sense that we both went to very good universities, and that definitely opens a door. We went to Wharton and Stanford, went to Oxford, and we're both quite well connected, like not in a, like we don't know royal families, but you know, we know people. Like I know someone here, or I know someone from Oxford who can connect me to someone here. So I realized that, you know, I probably don't represent like the typical female founder, in that it actually wasn't that hard. It was personally stressful because it's a horrible process, fundraising. You have to be absolutely relentless at just with your spreadsheet and going down, and you've got to find the right, a bit like dating, if anyone's trying online dating. You know, like there's a lot of frogs out there, not so many people that you want to kiss. But that's a different story to be talked about later. But it is that, it's just relentless. There are people out there that want to fund you. There are people that believe in you. There are amazing funds out there that will support female founders. It's just quite hard to find them. So the biggest problem both Matt and I had, and I always talk about Matt when I talk about this sort of problem with raising money, because actually it's a bit of a personality trait that we both have, which tends to be a little bit more of a female trait, but doesn't apply to all females, and some men definitely have this, which is to quietly and competently get shit done, not over-exaggerate what you're going to do, and not what we call 892. So we have a little expression called 892. So we met another business that we were going to merge with at one point. They were very early doing something similar. And when we started doing the due diligence on them, they said, oh, you've got thousands of people on our mailing list, and da-da-da. And then when we did the due diligence, they had 892 people on their mailing list. And it was just like they were just making up these numbers. They were just like, oh, well, you know, it's quite a lot. And we're like, no, it's not. It's 892. That's less than 1,000. It's not like tens of thousands of people on your mailing list. And it was a classic young tech bro. Man, like, that's just a lie. So ever since we've had 892 as our sort of little handle to say, we've got to 892 this a bit more, Matt, because Matt comes from a distressed assets hedge funds background. He has actually made a lot of money through his career, so he had some great connections from his hedge fund days who helped us get going with the friends and family round. That's what I mean about, you know, a few people who, if you say, can you throw in 100 grand to get us going, he knew people that could do that. My friends were like, sure, I'll put £10 in your Cedars fundraise, which was nice, but like Matt could bring the big guns. So that was helpful to get us started because he'd worked really, really hard in hedge funds for 20 years and made a lot of money and has invested a ton of his own money into StepLadder as well. But he has the same thing as me, which is, we're not going to lie. We're not going to say, oh, we're going to make 5 million in 2 years. We'll say, well, we might be making 200,000 in 3 years. And guess what? VCs don't think that's very sexy. So then somebody told me, they said, well, you know what you need to do, Lucy? You need to like 10x all your projections, because what the VCs will do is they'll cut them all down by 90%, and then they'll say, yeah, that's a reasonable business. But the VCs, were taking down all of our projections, which turned out to be almost exactly accurate, because Matt's quite genius at forecasting. And they would cut them down by 90% and say, well, that's not a business. And we were like, well, no, because the number we've given you is the right number. We didn't 10x it like everyone else. So that, for me, has been the story of our sort of fundraising journey. So 4 chunks, friends and family round, which really was sort of thanks to Matt's years in hedge funds. Turns out if you do a sports science degree or your friends become teachers and things like that, they can't invest in the same way. But so we did the friends and family round. And then we got a small seed round from Seed Camp, who were actually quite pleasant to engage with and helped us get going, and a good name on our cap table. And then in 2019, we got investment from BBVA and Anthemis, had a venture studio together, and that's actually another point we connected, wasn't it, when we were invested in by the same VC. BBVA were actually great. It's, again, it all comes down to like the individual people, like anything in life. There were 2 guys at BBVA running the venture studio, and they believed in this. They'd seen it working in South America. They couldn't care less whether I was, male, female, other. They cared about the fact this is a great business. They were really lovely people, and they pushed Anthemis to invest. And so we raised 1.7 in that round, and that was big for us. That was exactly what we needed. It was a great fintech investor on our cap table. It was a huge international bank. BBVA were like, great, we can launch you in Mexico, we can launch you in Turkey, under the brand there. And then the 2 guys that were running that went off to do other things. One left the business. I'm still friends with him now, but he's left the business. The other guy went to another part of the business. And then the people that took over, and this is the problem with those big sort of corporate venture labs, they're like, oh, we don't really get it. We don't really know what saving circles are. We're not that interested. They've invested, like their portion was about 1.2 million. We could have been a great partner for them. They've got all of these banks across South America that we could launch with. And everybody I get in touch with at BBVA is like, no, we're not really that interested. You've invested 1.2 million. Like, we've got a product that you can just take to market and will make you money. And the people in your country, in these banks, want this. It just doesn't make any sense. So for me, it comes down to the individuals. You find the right people, doesn't matter whether they're male or female or how old they're. It's finding the people that believe in the idea and can see the passion. So I can't say I've ever felt discriminated against in that fundraising journey, although there are always those sort of horrible stories about, like, here's what SAS stands for. And one very kindly older mentor who meant well by this, but I know it will make you all laugh, who told me to stop wearing dresses and painting my fingers pink. But I like having pink fingernails when I was pitching, and I was like, sorry, I'm turning up as me. You can either you can deal with it or you can get lost. But it's those things that are embedded, and people sort of saying, oh, we can try and make a space for you at the table, and it's like, I don't want to sit at your table. I want to turn your table over and build a new table over here. So that's been sort of the summary, I suppose, of our story. I'm very pleased to say, like you, we don't need to raise anymore. And Matt and I were having a meeting at his dining room table this morning because we don't pay for a proper office. I host a Christmas party. My poor team, I cook for them at Christmas, and we have they all come and sit around my table in my apartment because we don't, then it means the Christmas party costs £200, not £2,000. So we're really good at saving money, which means we don't have to raise again because it's exhausting.
It's exhausting. Shefali and Jenny, what is out there in terms of funding that entrepreneurs may not realize? What are places that they could look that they're not looking, perhaps?
Is most people in the room founders, and are you building businesses? Oh, good luck.
It's a mix, yeah.
So there is money. There is money out there. People think, oh my gosh, there's no money, but there's tons of it. And it's just a question of meeting the right people, to Lucy's point, spot on, and to Maria's point, about who wants to give it and what it is. And I've worked with investors and co-investors where I wouldn't trust them with the stapler. And I've worked with some who I trust my life with. But you have to meet people where they are, okay? And I've grown up in the American school of working because I've worked for mostly American companies. So you're product-oriented, you are execution-oriented, and you are profit-oriented. Whereas here, I think we just, faff around. I don't know what we do here sometimes. And so it's very, very, no, it's true. Like if you look at the economics of businesses, when I get pre-seed and really early seed in investment pitches, the maths doesn't maths. It just doesn't make any sense. So a lot of my deals, I would say in the last 18 months, were non-European because it just doesn't work. I talk to American investors who say the ideas out of Europe are phenomenal. The founders are not so much. And there's a complete bias because we just don't have, whether it's the gravitas or the experience or the will or the ambition to do things. So Pinar, to your point, there is a lot of money. It's just a question of what do you need it for? What are you building? How do you actually pitch? What do you pitch for? And what's the product? And can you demonstrate from nothing to something? There is a transaction, or there is credibility, there's profitability, there's users, there's clients. I invest at such an early stage that I've actually given people money over a coffee because of an idea. And I thought they were great people. So I was like, oh, here's some money. Go, good luck, and call me if you need anything. I've invested in people who had a bloody brilliant business plan, and it was rubbish towards the end of it all because they were just, doing nothing. So you do have to think about the founder. And I've invested in people who have been I've not invested in businesses where the founders are very painful. Mm-hmm. And, you do a pitch, and I had someone say to me, Shefali, I don't need to convince you to do this. I'm like, actually, you do. That's the pitch. You actually have to convince me for me to give you some bucks. And she was like, but I don't wanna. I was like, why are you calling me? The most bizarre conversation I've ever had. I've also not invested in businesses where, to Maria's point, I've looked at the cap table and there are people on that document. I was like, there's no flipping way I'm investing with these people. I've genuinely missed out and not done deals because I didn't like people on the cap table. So you have to be really, really particular about who you want to work with. And they're going to be on your cap table in your business for about 5 to 10 years. You got to like them. They might have tons of money, but you got to like them. And they got to provide value to you. And my job as an investor is to work for you. Yeah, you've taken away my money and you've given me like 0.01%, whatever. But my job is to work for you. So whether that is my expertise as a product person or a compliance person or an ops person, or let me open my address book to Lucy's point about who can I then give you and help you with follow-on investments, whatever. My job as an investor is to help you. If you are just not due diligencing your investors well, please start doing that, because you just shouldn't take money for money's sake. I loathe accelerators. I don't invest in businesses that go through an accelerator because the economic terms that you get are horrible. And for me as a standalone individual investor, when I look at an accelerator or an incubator on your cap table, it is horrible because the follow-on round, the incubators and the accelerators skew it in such a way that it is not good for a follow-on investor. So again, think really tactically about whether you want to do that. I'm the worst investor because I actually try and say to founders, let's try and help you bootstrap it. Don't take my money. You might want it, but don't take it, because actually this is a damn good idea. It's a super good business. You are brilliant and resilient. Try and do it by yourself. Don't take investor money. And the other thing to say about when you think about your investor base, and there are investors and there is money, whether it's debt, whether it's equity, whether it's convertibles, whether it's looking only at high net worth, only at family offices, whatever it might be, make sure when you do deal, you do a good job. Because sometimes your back is against a wall and you're like, you know what, I just need the $10, so I'm just going to take it. Don't do that. Try and give yourself enough runway to make sure that who you are talking to is worth your while and they understand your product. I can't tell you how many times I am at maybe the last round of investors that a founder wants to fill their round with. So it's, 50 grand, 100 grand, whatever. And they're like, Shefali, do you think you can fill it? And they've already raised $1 million or $2 million. And I've had it so often that a founder will say to me, you're the first person to say, can I have a product demo? I find that astonishing. And most European investors have never built a business and they've never worked in a business. So don't take their money because they don't have any idea how hard it is that you work. And when you're in the trenches and how deeply, deeply difficult it is. To Lucy's point and to Maria's point, it's a really hard grind. And if they're not in the trenches with you, like I can get my own shovel made, thanks so much, don't give me the shovel, but they have to be in there with you. So work with an investor who actually has been in the trenches, built a business, knows how hard it is, can open doors for you, give you clients, etc., and then take their money. But make sure that you've got a good bank of that. So whether it's the grants, whether it is the family offices or the high net worths, there are tons of very interesting family offices at the moment across Europe and also particularly in Asia and MENA who are now pivoting to doing direct investments in startups versus going through a fund. So in historic worlds, they used to invest in funds and those funds used to invest. So I, a very long time ago, thought, well, let me try and raise money from other people and be like a hold assets and hold funds of other people and then invest it. And I've had, very similar to Lucy and Maria, I've had actually an LP say to me, you're too confident. I say, oh. He goes, you know your stuff too well, Shefali. And I was like, I think that's the point. That's why you should give me $10. He's like, no, it's too much. And I remember they would talk to my lawyer actually, who then said to me, can you please tell Shefali that she needs to tone it down a little bit? Oh, and I was like, shouldn't you be happy that you're going to give me $5 million of your bucks because I know what I'm doing? And that's really why the journey went from looking at an open-ended fund to then just doing my own thing, because I was like, this is painful. And managing people who are incompetent is very painful. Like, I don't have time to do that. No, Lucy, like, who's time? Like, I don't have time. Like, you're making my life a misery. And the people who give the least are the worst. So therefore, is that too direct? No. I mean, but it's true though.
I love it. I've missed
so
you.
just manage the people well. Like, it's one thing to get, my mother and my father were like, oh, we're so proud of you, darling. We'll give you some money. I was like, no, you're like too painful. As my parents, I don't want your money. But to manage them as investors was just horrendous. But also managing friends and family as investors was horrendous. So just be very tactical about where you get money from, but more importantly, why do you need external money? Be really, really clear about why do you need to go out there and get $100 from someone. If you can get it yourself and manage it yourself from good funding, which you're proud of and you're happy with and you're happy to manage, because part of a job as a founder is managing your investors, which is painful. Don't do it. There is enough. So I think you just have to be a bit creative and a bit clever about what you want to do and why you want to do it.
Absolutely. And in the latest case that we just published about AI, the founder actually talks about how a good investor can actually be an enabler. Absolutely. It's not so much about the money, but about the networks that they'll get into, like the clients that they'll introduce you to.
You should be asking your investors, what are you going to do for me? 100%. And don't be embarrassed about it. Don't be ashamed about it. And if they go, but I'm giving you some money, you should end the Zoom call. Don't even bother meeting them in person. Yeah, you should do that.
Jenny, I want to ask you, how do the entrepreneurs who are here and who are looking for opportunities, how do they meet angel investors and how do they make these the magic happen?
Yeah, thank you. I mean, first of all, whilst there is a lot of money available, as you saw the stats, only 1.8% of equity was accessed by women in terms of overall equity, and it's still, it remains incredibly low. So one of the biggest challenges for women is actually finding investment and finding the people who can offer you investment. And I mean, the big part of all that we're talking about really is the right money at the right time for the right stage you are at, and not wasting time going to the wrong money. So, you know, if you're not at a stage yet where you could be using venture capital, which is obviously going to be bigger sums of money and taking more equity, and you're at a very early stage of starting up and building and growing your business, then you should be looking at angel investing. And if you don't want to give away equity at all, then obviously you have grants and you know, undiluted opportunities, which everyone should access, by the way, if they can. And certainly as angel investors, we have no problem at all with someone who's had the gumption to go out and get grants, particularly to take them through that early proof of concept phase and starting to grow the business. The point about angel investing, it's to really give you, as we've talked about, not just some risk capital, but also to give you that chance to find people who can help you build and grow your business and who can bring you access to customers, you know, introduce you to people, help you introduce you ultimately to venture capitalists as well, but also who, you know, who really want to be aligned with you as an entrepreneur. And, you know, that's what, you know, the good angels are. So there are a couple of important things to know about. First of all, I hope you all do know about, but if you don't, you should know about the Enterprise Investment Scheme. So this gives, and the Seed Enterprise Investment Scheme, what this gives is if you're a bit more developed, a 30% tax break as an investor. And if you are in an early stage of your business, then investors can get a 50% tax break for backing your business. So as women founders, that's a massive gift that you have to be able to make anyone who's interested in the UK to invest in your business, they can have access to tax breaks. There's actually 8 other countries across Europe that have tax breaks, and other states in the US have tax breaks too. But if you're in the UK, there is that opportunity and something that you should always consider. So that's something, and lots of investors will look to see if you can help them access that. But secondly, it's also worth bearing in mind that I think it's much harder to find individual angels personally. And so we as a trade body have always encouraged angels to form syndicates. In other words, that when you're talking to someone, they will have a syndicate or a group of other angels around them that can bring you the money you want. Most individual investors in the UK will, in fact, it's true of American angels as well, US angels, are only probably investing at a maximum personally per investment around 30K, and only very occasionally you'll find someone who can give you 100K. So the point about syndication is that those people come together and pool their investment and pool their knowledge and their experience and skills, etc., to bring you a much bigger sum. And it's much easier to negotiate with them, but also much easier to find. So we have 120 angel groups across the UK, 20,000 angels, and an increasing number of those. We have 8 that only invest in women. We have 14 that have 14 that have a very high proportion of women they invest in, 70%. And we have a whole group that have signed the Invest in Women Code, angels and venture capitalists, by the way, who all want to back more women in their portfolios. So there are people out there who want to back women. There are people out there who want to back women with, you know, great ideas and obviously great businesses. But I think it's worth bearing in mind that we are gradually changing the game, and there's probably about 25% of women in the business angel community now, compared with even worse stats a few years ago when we first looked into this. And if you look at sort of, you know, those who are really committed, they will have a very high deal flow. So it's much easier for you to go in and talk to those people. And lots of angel groups and VCs, by the way, have open office hours, which means you can go and have those pre-conversations with them before you're actually bidding to them, before you're actually pitching to them. So that's in our own UKBA directory. You can find all of these syndicate names, and you can plug in the amount of money you're looking for, the region you're at, your sector, and so on. You can find, and then quite right, as everyone said, you need to do your due diligence on them. First of all, looking at who else they've been backing, what other companies they've been backing, and really, you know, understanding more about them. But they are definitely very much easier to find as syndicates rather than they are as individuals. You will meet individuals, obviously, but very often an individual can't give you possibly, quite likely, the amount of money you may be looking for. So you need to obviously build that across a number of angels anyway. So that is something that's out there, and the fact that we have an increasing number of women who are committed to, and men, I'm glad to say, who are committed to backing women. It's a very good idea to target those who find the Invest in Women code, as well as finding ones that have a women-led focus, which again, many of them do. So I think that's worth bearing in mind. I mean, you've had some fantastic advice, obviously, from Shefali, but what I would say is it is very important to do your homework and make sure you're not spending, in fact, we were just talking about it today. I was actually doing a webinar this afternoon for a group of women in deep tech who come from Central and Eastern Europe and Turkey. And many of them did not have access to the level of opportunity that you have in this country in terms of the availability of angel investors, or in the more developed parts of Europe. And so, many of them have the sense that they've been trying to raise money for months and years and still not getting anywhere. And we were really there to give them the sense of how to prepare, which is what you all need to do. Build your investor toolkit. In other words, make sure you've got, a really great pitch, that you've got a really strong, all the data and information you need that any investor can want to know, and that you're really ready and done your homework to start speaking to the angels. And that takes time. But once you're out there, you should not be spending your life doing that. You should do it in chunks. Everything's about creating milestones, which has already been discussed. So how much money do I need for my next milestone to get to where I want? And whilst you may see that you're going to build something huge and may want a lot of money over time, really try to think, so you don't spend your whole life trying to find that money, what you can do with what. And I think that's been made very clear already today, what you can do when you start to put that together. I always say build a cocktail of funding, because it can be some angel money, it can be grant money, it can be some debt and loans in the right circumstances. But always, and then generally one lot of angels will generally bring another lot of angels or a venture capitalist on board, so that it's, that you build it. So you need to see life as not one bit of money, one after another, but how do I combine it to create the most I want out of it. I will say what we don't have is enough women actually coming forward to ask for investing. So all the data is showing us we just don't have enough women in the pipeline. And I completely refute it when men tell me, well, there's not enough women coming towards me. And I say, go and find them and make yourself open and welcome. So, that's really, the opportunities for you But we've talked a lot about networks, and that means people and people who can introduce you. And I will say it always has been a massive issue for women, not having the networks, not knowing the people, and not getting into those warm referrals, which we know are the things that really take people forward. But I will say that increasingly, and I don't quite disapprove so much of accelerators, I disapprove of accelerators that take a lot of equity, but I don't disapprove of accelerators that are out there, many of them female founding, not to mention at Oxford and Oxford Saïd, that are not looking to take great sums of equity, but are actually there to give you the links and the channels and the pathways. I mean, we love to hear from, students who've been on those programs who generally, are ready to start looking for investment. So I would say use all the resources around you. Don't spend your whole time fundraising. Try to chunk it up and do what we've all been talking about, which is do your homework, target the people, find people who may have already know those investors, but actually also recognizing that we have an increasing number of both VCs run by women and women focused and angel groups that are completely open to wanting to back more women, and we're happy to talk to you as well prior to making those investments. What is your VC, by the way? What is the name of your VC?
It's Trio VC in the US.
Great, fantastic. And you're a woman in it, so that's fantastic. And increasingly, we're not quite telling people to set targets, but we are seeing, VCs and angel groups committing to wanting to back more women. So, don't be daunted, but I think it is what we've all said, getting yourself in the kind of right position. By the way, there are still issues for all women teams compared with mixed teams. We've heard of mixed teams here. There are still challenges. We are working on it. If I would say the signatures of the Investing in Women Code Angel community this year, you're hearing it from me, it's not being released until the 10th of July next week when we issue our latest Invest in Women Code report on the nearly 300 investors who are backing women investor organizations, VCs and angels. But among the angel community, of which there are 50 that have signed the code, still more to go, 52% of angel investment went to either mixed teams or all women founder teams last year. This is commitment growing. And for all women teams, out of that, 25% of it went to all women teams, which is a major progress. So, you know, don't be daunted if you're an all women team, but, you know, gender teams where the women are taking a role, not just gender teams where there's a man with a woman who is not taking a leading role, either as a founder, you know, or C-suite. But on the other hand, don't be daunted. We've already said, I think, we're undaunted on this panel. Don't be daunted, thinking you can't find investment. And I will say the scene, we have to keep going, but the scene is starting to change.
Thank you so much.
May I just say one quick thing?
Please, of course.
About your investor base, I think also just be very particular about who you go to pitch to, because your time is very, very important. So if you're building something in food, don't go to a finance investor. Because I get that. I got an AI pet food business, because I do AI investment. I got an AI pet food business. And I was like, where's the AI come into this? And they're like, Shefali, if we don't say AI, we don't get a meeting.
That's absolutely.
But don't do that, because now I don't feel great about investing them to people I know who invest in food.
Yeah, absolutely. No, you have to.
Because it's a credibility thing. So be really circumspect about who you pitch to, and try and pitch to a partner level or a senior associate person. And if you can't get them, call around to find out who the partner is at that firm, who you can have a good meeting with, because they're the ones who are going to make the decision and write the check. But if you're building something in health, don't go to a transport VC, you know, which happens a lot actually, because I think a lot of people think we'll just throw a dart and see what sticks. But the sad part is so much of this happens sadly on WhatsApp, and all of us know everybody else. And so just be really, really clear about what you're trying to do, what your business is, what the product is, and who you're trying to get money from. Because also, as we are saying, they have to help you. And a transfer VC can't help you if you're in food or in health or in, I don't know, you know, doing something in menopause.
Thank you so much. This is amazing. I want to give the audience a chance to find out more from our panelists.
I'm in the process of converting, and so once it's a security, right? And then it's a debt in your balance sheet. It sits as a liability in your balance sheet when it's a convertible. But from our perspective, the most important thing is the intellectual property. If the business goes busted, that's a security that they have in your business. And the creditors, you may have also need intercreditors agreement if you have many angels, and they need to be ranked in which order they get paid if the business goes busted. So if Weaver Labs were to die tomorrow, I can't recover any of the intellectual property that I have, because in the intercreditors agreement that we have within those credit notes, all of that would go to the highest creditor, which is the note holder. Whereas if everyone has ordinary shares, it's different, because you liquidate the business. I'm not an expert on notes, but I think that's my only concern right now, intellectual property.
Say something as well. You first? Well, first of all, if you're looking for any investor who wants to use the enterprise investment scheme, which is actually highly used here in the UK, if you're in the UK, you, as an investor, I can't use a CLN. I cannot use a convertible loan note. I can't get my tax break if I do that. So that is a turn off for a lot of angels, obviously. And then it's not such a big thing used here in the UK. There's an increasing use of SAFE. If people come across SAFE agreements, that is different. in that it's legally okay as long as you convert within 6 months. It has a built-in sort of safety net that this doesn't end up as an open-ended situation and dragging on for a long time. So it has a built-in safety net at 6 months, which allows that to then become EIS and SEIS eligible, which is the other great opportunity out of that. It does keep it open for more investors to join. In other words, you're establishing certain terms, but the whole point about it is about not establishing the valuation. That's really why the majority of people kind of look to it. But it's something to be very clear on. This has already been mentioned about what that implies for you on the, in your fundraising generally, cap table and kind of future opportunity. But I would avoid it being too open-ended, anything like that you do. And it isn't, for me, it always sounds like a last resort rather than your first resort. So it would be good to discuss further why they wouldn't want to, establish that with you. But if it's in your interest, then obviously it's worth considering. But there's a few downsides to it, is what I would just say.
I believe there's an online question. Let's take that. Please, Shefali.
Question. I'm an indifferent instrument investor, so I'll invest on anything. It is not in your benefit to do a CN, particularly if you're a UK, very much what James said, but it places a lot of pressure on you when you do a CN. So I prefer a safe. So I think as a founder, if I was doing a founder, I would do a safe, or I would do just a priced round, depending on my product and traction, etc. It's also the simplest. And so when you have other things to worry about, then you're weird investors. And what financial instrument they're investing on. So the simplest you can make it, the better it is. And this country is structured in such a way with EIS and SEIS. It is better, safes are better, and they're easier. And for you as a founder, it's less pressure, but also your deliverables are easier to do and execute on when you look at your next round after the safe.
Lucy, do you want to start?
So I don't know if this is about being female. It's just about the resilience to keep going. And actually what I wanted to say to you when you asked that question, and we're going into all the technicalities of it, and I can see you sort of going, oh God, I feel a bit tired by all of this, is you've got to have cheerleaders around you. The single biggest thing you need as a founder is just like relentless positivity. And so I think that's really the thing that is sometimes the hardest, is just to keep going when you just get hit by wave after wave of, oh, the regulations are not working, and now there's a lockdown, and now this funding. It's constant rejection. And by the way, if you're dating as a female founder or as a male founder, right, if you're trying to date at the same time and you're getting rejected from dates in parallel to getting rejected from investors, it's not super fun, I can tell you. So you need a fun.
I feel there's another story. There's
a bunch of other stories. There's a parallel sub-story here.
Panel,
that's the drink story. But yeah, seriously, I mean, you need to, there's all the technicalities of fundraising, and then there's everybody needs a cheerleader.
Yeah. But also, like, I should say, as an investor, I actually say I have a Slack channel with everybody I invest in. And I say to them, do you want to have a vent session? Call me for 30 minutes. So they vent to me. Because they can't vent to their co-founder. Sometimes you can't vent to your spouse because he or she is like fed up. You can't do that, and you're taking home your stuff, and it's hard for them too. So I actually say I babysit founders' children when they are busy and got stuff to do, and I say to them, call me if you want to yell and vent and you're frustrated, because you have to have an outlet. Relentless positivity is wonderful, but it's also really hard. And so I also say to them, Slack me and call me if you want me to sit and listen to you yelling and screaming. And sometimes you get the most fascinating conversations, actually. And they are venting not about their business. They're venting about their spouse. So it's just one of those things, but they need it. They need something else. And it's unbiased, it's unjudgmental. And you've been there, so you know how tough it is. And you want to have investors who are your cheerleaders, but also who are realistic, about what you're doing and how hard it is what you're doing. And it's incredibly enormous and wonderful what you're doing. So someone has to recognize that.
Beautiful. Let's take two more questions.
This issue about a woman founder is actually your sense that you have to do everything all the time. 24 hours, you're solving it, and you are the woman, you're having to lead the team, lead the product, lead the investing. and there is a sense that it's all down to you. So I think not only are we having great co-founders, which is obviously most incredibly important, but also building, you know, a support network around you, and ideally always try and find a mentor. I mean, if you've got a great investor, and they're a rarity to find someone who's as open as that, but I think that definitely building people around you who you feel are your network and your cheerleaders, as we've said. But I do think we have to recognize that you can't do it all you can't be 24 hours on, and you have to take time for yourself. I learned that, and I always say one of the big lessons you learn is you can't do this 24 hours, and you need to share it.
Absolutely.
So in terms of pivoting, I mean, as a deep tech business, we started with a vision, which I don't give up on it just yet, but the big vision, it was going to take years to achieve, and the industry was just not getting there. So we had to reorganize the whole thing, and much like you, that you had a B2C idea, and then it's like, let's try this thing and put it in here because there's where the market is. It tells a story. And the most important thing that you need to think about is the story. And I read a book that it's called Crossing the Chasm, about selling deep tech products and how to market them. And they always talk about, you know, the beachhead approach. And so, for instance, like it's all based on World War II, and Normandy was the battle, right? So in order to win World War II, they had to win Normandy. And that's the beachhead. And yeah, you may have to pivot, but because you have to run a business and you have to pay the bills and you need to find product market fit. So as long as it is part of the story, everyone should be fine with it. And don't forget, it's your business, right? Like I remember once being in a call with our horrible accelerator program investor who took a lot of equity and gave me a lot of headaches, and was literally criticizing a leadership decision and a strategic decision that I had made with a product. And I said, like, listen, the last time that I heard, you were not entitled to make any comments about how I run this business. Like, that's it. Like, you may have your opinions, that's perfectly fine, and I'm going to hear them, but it's your business. And if you think that's the best thing for your product, go ahead with it, as long as there's a story.
Perhaps one of the, so throughout these stories that we're writing, one of the ways that I see pivots happen, and I think it's a very good thing, is when businesses find their first few clients, and especially if it's a kind of a SaaS business, or if it's like, especially if it's an AI, then that client actually ends up demanding a lot from you. And you almost turn yourself into a consulting business if you're not careful. And so a pivot to say, okay, hold on, how do I make this scalable, rather than being a consulting to these few guys? I think that's a very good pivot to do. And I think many smart founders have done that.
And as an investor, I love pivots. Because to Maria's point, 100%, you know your business better than I do. I get like a monthly investor report, which is cute and nice and sweet and everything, and it's got a good font, but you know your business. You know it better than I know it. And so if you say to me, Shefali, we tried this, it didn't work, so we're gonna try this. I'm like, great, how do we make that happen? And what can I do to help? Mm-hmm. And that's how you should be thinking about it, and have the confidence in it to go, we tried something, it didn't work, we're gonna try something else.
I think that any time it can be, it depends at what stage you pivot as well, because obviously people often invest in you with a certain set of, objectives, your business goals, often even your team, and all the kind of infrastructure that you've put around you that you've convinced them will lead to your successful scaling. So obviously a lot of it will be really bringing your investors, and that is generally also your board as well, in terms of those along with you when you do this, because although it's nice to say it's my business, actually, that was me dropping my little, sorry, got it back. you know, your board is obviously there also to give you strategic advice. And in fact, most investors are there to really help with all these things. And many of them have been through pivots and all kinds of things. So I think it's really, I would just say, always share those kind of decisions with your investors. It's not that they're going to say don't. More importantly, they'll be very, very behind you, particularly if it's helping you to achieve your, the objectives that why they backed you as well. But I just think it's always worth doing that, because it's surprising how, I guess, how involved investors can generally feel. And because generally, as particularly angels, but this obviously also increasingly VCs, because of the stake they have in your business, we are aligned, but we have an investment in the business, and therefore we want to make sure that all still continues.
I would say, iterate as much as you need to iterate. Because yeah, I've given you $1, but I'm expecting $5 back. So whatever you have to do to get that, you got to do it.
That's good.
And Airbnb launched the way it was the 13th time. Google is 21st search engine. They tried a bit of things. So I wouldn't be nervous about it. I would just try stuff. Yeah. So may I be very blunt?
Yeah, be blunt.
Okay, you are going to be in an investment environment that doesn't care. And unfortunately, we are now in a geopolitical climate where things like DEI and investing in women and investing in non-white founders, etc., is not au fait.
You ask for an opportunity to, because my skin's black, give me an opportunity.
No.
To say I'm back to make you so much money.
Yeah, everyone's here to make money. I'm with you. I'm 100% with you. But I'm saying you're going to be approaching investors who unfortunately have moved. And so it might be a bit harder, but there is an environmental and a political climate at the moment which is not favorable for people who look like us. And so therefore trying to find investors, I would say, I wouldn't actually go to traditional VCs, I would go to corporates. And I would say to Channel 4 or BBC or Revlon, sorry, they don't exist, sorry, Unilever, these are the types of marketing and data analytics and insights I can get on these types of communities which actually help your businesses or help your products in this way. Unilever Ventures give me $800 million. So you have to change, I would say, the approach and who is on your books to invest. I wouldn't go to the traditionals. I wouldn't go to people you think you should go to for money, but I would also pitch it very much on the economic incentives, which you would anyway, but focusing, I would not say, which I get a lot, I'm a woman founder, you're a woman investor, do you want to invest in me? I'm like, no, because your product's crap. So no. It doesn't matter that you're a woman or you're gay. I mean, I'm both, and it doesn't really matter. So you have to be really, really clinical about how you're going to pitch it and be very brutal about how you're pitching it as well, and take no BS. But being cognizant of the environment where now anything is being thrown at us collectively as a reason to say no. So therefore, obviously you'll have your stats about you and you'll know the value of their data and the value of that market. But I would change the pitch people, or who you're pitching to rather, very drastically, because there is a complete cause and effect of what your research says and how much I'm going to pay for, I don't know, shampoo. I'm sorry, I don't know. But so try and find that match and then invest with them. Can I give you one really weird stat, which is there is more US pension money in European VC and British VC than British pension money, which is effing bonkers. Sorry, Elena says I can't swear, but it's horrible. So, so we have to and now it's changed, yeah, Jenny, but for a while it didn't be the case. True. So you have to just be a bit clever and smart and cutthroat about it.
Probably a couple of things. Actually, there is certainly an increasing number of angels who totally back, diversity, and particularly want to back Black and ethnic minority entrepreneurs. And we have an increasing number of Black and ethnic minority people who are angels as well. And I can tell you the names of groups who are entirely focused on this. But I think it's also worth bearing in mind, we talked about this, if I understand it's a research business, actually that's incredibly difficult to attract equity for, and particularly as angels, because again, it would not qualify for, but to be brutal, it won't qualify for EIS and SEIS because actually consultancy and service type businesses do not qualify under this because they're not seen, interestingly, as risky. I mean, your clients are probably in all kinds of risk, but indeed you have a massive commodity, which, obviously, which is data and which is valuable, and which I totally agree with the points you made about looking at corporates and also foundations and so on. I'm not sure it's certainly not an early stage equity play. And I think it will be some specialists who will back it. But I mean, clearly after sponsorship, there should also be certainly grants and foundations. I totally think you should be, again, mixing it's fine, but I think I wouldn't waste your time pitching to angels. I would definitely go to some very strategic investors that you could also bring some definitely. And just to say, overall, just to bear in mind two things. Yes, the pension things absolutely is changing, and clearly, you probably heard about the Mansion House Accords. So we've now got a channel for pension funds to invest and to invest alongside equity as well. But secondly, we are working a lot with the wealth management industry who look after high net worth women and men. And all of them are allowed, and they're not allowed to play much, but they're allowed to spend 5% of their money on philanthropic things. And you are in that league, which is far more likely to accept. So some of the bigger wealth managers, we've mentioned them, people like Rathbones and Goldman Sachs we've mentioned today, and HSBC and the banks all have this capacity to channel money towards those. And believe me, I think it's a fantastic, organization clearly, and what you're doing is very, very important. So I wouldn't, but I would, it's like everything, make sure you channel your time and energies towards the right investors at the right stage and the right players.
Well, we've been a bit over time, Liz, but this is fascinating. I could be here all night if it wasn't for the heat. Thank you so much for a wonderful panel. Thank you, and thank you, audience, for being here.